how should you be looking at an off-plan project? Because not every unit can be a bang for your buck, like make you actual money out of your investments. So this video would be an example of how I analyze Creek Waters 2. So these were the best units that we selected out of the entire project. Now I'll explain why. Townhouses are pretty, it's common sense. There were only 8 units. Now from Creek Waters 1, so my investors picked up some of these properties. They're around 3,000 square foot. In Creek Waters 1, this was priced at 4.95 million. So the people who invested in those townhouses, they almost immediately made a profit around 300,000 dirhams. Then a lot of investors asked me, okay, then is it a wrong time for me to buy? So hold on to that question and I'll give you an answer for that. Is it a wrong time to buy? Because did the investors who invested in Creek Waters 1, did they do the right investment and am I doing the wrong investment? So let's hold on to that question. Now, why in some cases I've mentioned level 2 to 7 and in some cases I've mentioned level on higher floors. So how Emaar, at least a top tier developer, how they price units are that the front facing units, that means the units that face the creek, they will be, let's say in this particular case, would be between 2,300 to 2,400 dirham per square foot. And the units behind, facing the park, would be 2,000 to 2,200 dirham per square foot. So you have some advantage over there, but how do you take maximum advantage of the situation? Similarly, lower floor units are priced at a different slab, and as you go higher, the prices keep increasing. So how do you take maximum advantage of? These are hacks. These are hacks on how you can take maximum advantage of investing in an off-plan property. So for example, these units, the exact same units, unit 0, 1 and 1, 0. Now unit 0, 1 and 1, 0 are exactly at the front. Full pool and water view, full pool and creek view. Now at a lower floor, when I enter my apartment, I have eye-line view of the water, which is phenomenal for me. I think it's a brilliant investment. Now the exact same unit, that means 0, 1 and 1, 0, as you go on higher floors, the price keeps increasing. So that means on a 27 to 38, this exact same unit, the same floor plan would be at not 2.6 million, it would be at 3.2 million. So you immediately score, immediately. Because why? When the property is ready, when let's say you want to trade or you want to rent. In either case, if an investor or an end user comes to buy the property, they're extremely happy with the full water view. So who gets the advantage of having more profit? You. Now, why have I chosen these few units? Now, I love corner units. I love corner in any building with the right developer. If you have the floor to ceiling windows, and like for example, these are floor to ceiling beautiful windows, right? But imagine that's facing the creek and some magnificent property like the Creek Tower. So if I have floor to ceiling windows and I'm in a corner unit, I have phenomenal light. I have the investment value of corner units are always higher. There's always a higher demand for it. In the corner unit, let's say 08, 05, these are on the right hand side, right behind Creek Waters 2. So technically, yes, it is facing the park, but on a higher floor. Now this particular building, Creek Waters, is around 55 floors. The projects in the front are around 25 to 35 floors. So above the 35th floor, I get a phenomenal panoramic view. I get to see the creek, Burj Khalifa and the Creek Waters because I'm an L-shaped property. So that again will have demand. So if I've picked it up at around 3.3 million, it's a 3-bed, or if I picked up at 2.6 million on a very high floor, a unit, it again gives me value because I've invested on a lower price per square foot. To answer your question, as to Creek Waters 1, I've bought a townhouse at 4.9 million. Now Creek Waters 2, why should I buy the same property at 5.3 million? So to answer your question, so this is a global real estate report by UBS. So where we compare the prices of the entire globe in comparison to Dubai. So Dubai market prices are highly undervalued, and it's considered as minimal risk. So how do we analyze this? We analyze clearly by the demand, right? The population. So currently the population of Dubai is around 3.5 million. There's been a phenomenal increase in the population. The expected population by 2040 is 5.8 to 6 million. We're expecting the population to increase double. So there is definitely a demand for well developed communities. There is a shortage of luxury communities in Dubai. Now, I have several investors who've come, they lived in Dubai Marina, they lived in JLT, they look at the building quality and they're like, is this the quality of Dubai? And then that is why they opt towards going towards off-plan, the newer projects that's built with more luxury amenities. As you can see, developers nowadays always trying to compete with the current developers, trying to build better projects, infinity pool, golf course, tennis courts, basketball courts, amenities, branded residences. That's because there is a demand for the situation. You will find properties that have never appeared before in the Dubai real estate market. I mean, I was surprised when Ellington launched a property. The villas between 17 to 35 million, and it sold out. So there's a separate video that I'll be making on the demand of luxury. But clearly right now we have an opportunity here. So what is the opportunity? Currently, if you assess the per square foot prices in downtown Dubai, it's around $1,000. That's 3,500 to 4,000 dirham per square foot. You're investing in Creek Harbour at around 2,200 dirham per square foot. So in layman terms, let's suppose you invest in 1,000 square foot 2 bedroom, around 2 million dirhams. So your friend or your competing investor bought at 1.8 million dirhams, but when the property jumps to 3 million, you still have an advantage. So the property, it's inevitable. It's an Emaar community. It's 100% owned by Emaar. You can study any Emaar community, let it be Arabian Ranches 1, Arabian Ranches 2, Emirates Living Meadows, Springs, downtown, Dubai Marina, any Dubai Hills is a phenomenal example. We're at Dubai Hills. If you just check the per night rentals and collective at Dubai Hills, you will get your answer. So it's 100% Emaar owned and managed property. Your property price the increase is inevitable. So, but what is your job? To assess the right investment. And after that, what do you do? So how do you take maximum advantage of an off-plan property? How do you take advantage of the payment plan? The fact that it's till 2027. Right now, the bank rates are inflated. It's right at this stage, it's around 6.5%. So how do you beat this? So this principle cannot be used in every location. For example, in JVC, there's no point in me giving you an exit strategy. But over here, what if I tell you by July 24, okay, between this stage, July 24 and sorry, my laser stopped working. Between July 24 and March 25, that means I would have paid 10, 20, 30, 40%. I've paid 40% of the investment. In between this span, Creek Harbour is going to become a complete island. That's point number one. So that we have a little bit of an exit over here. And somewhere around the same region, Creek Beach will be handed over. So what happens? I have a bridge. I can walk across to Creek Beach. I can walk across the entire island. For the first time, Emaar is developing this kind of a concept, an entire master community with 3 different divisions. The island that gives you the Dubai Marina vibe, a Creek Beach, and then it's creating this magnificent downtown area. So that's your exit number 1. Now somewhere, if you're willing to go for the next step, now here you're paid around 40%. If you pay 55%, okay, let's up the stakes a little more. 65, around 70%, all right? You've paid around 70%. At this stage, when Alabar announces what's going to happen, and when he announces about the Creek Tower, okay, let's give it a name, the monument, let's say a magnificent tower. The idea is it's going to be something the concept is of Eiffel Tower, guys. That's the concept. It's not going to be a residential tower like Burj Khalifa. It's going to be a structure, extremely tall. The idea is to be taller than Burj Khalifa. There'll be a viewing deck, but it'll be a masterpiece, because this is one of those last plots in this phenomenal city, Dubai. So at this stage, when they announced you've played close to 65 to 70%, at this stage is when we get some serious, we're talking about some serious numbers here. That's when it goes towards the 3,000 to 3,500 per dirham per square foot mark. At this stage, we paid around 40%. Over here, your property value goes towards the 2,700 to 3,000 dirham mark. So you have opportunities. The more liquidity, of course, cash is king. The more liquidity you're willing to exit, the more profit you're about to make. But now, how do you compare this with your regular rentals? I know even now a lot of people are very comfortable with their Airbnbs, which is a phenomenal investment opportunity as well. But then you need to compare this sort of return. That means from July 23 to March 25. You have to compare with, okay, what if I gave the property for rent and what if I trade? So that's the risk that you should be taking. Apart from this, so these are the exit points. This is how you should analyze. Again, you cannot do this in a JVC because nothing's coming up. There's nothing new happening. Neither in downtown. It's a mature market. Same case with, let's say, Dubai Marina. But in upcoming areas, so this principle can be applied in Seascape, Mina Rashid, that entire golden belt that I've been talking about. You can apply this in Creek Harbour. You could apply this in Dubai South. But now let's go to another stage of analysis. So now we come back to our regular standard analysis module. So first we choose the right unit, the right floor plan, the right price per square foot, and then you understand your exit points, and then you put it back into your standard formula where you understand, okay, what is my price per square foot? Now it's, why am I paying around 1,000 dirhams? And now I know we've discussed this sheet in my Every Investor Must Watch, but I think it just makes sense to add this into this video as well, because this is your bread and butter. This formula should be applied before any investment in Dubai. You need to assess all of this. That's the only way to make a sensible investment. So why is it 1,000 dirhams in JVC, and why is it around 2,100 to 2,200 in Creek Harbour, and why this investment makes complete sense? And what are your exit points? What are the potential monthly rentals? What are the ROIs? Every time it's TBD, means to be discussed. I'll discuss in person. And the exits will be discussed in person as well. So this is where you may take your call. Should I be happy with my 9% monthly income, or should I target on the 25 to 30% appreciation model in certain areas, because Dubai is a booming market? But that's the call which every investor takes. I never force any investor. I give them the complete analysis, and then it's their call to take. See, I'm not saying this is a bad investment. This Iman, again, phenomenal developer. If an investor is extremely happy with making around 14% ROI, go for it. I mean, I'm not saying it's a bad investment, but I'm just telling to make an informed decision. These are few tools that you can use, how to choose the property that is going to make you your money. Let your money make you money, and let me help you make you some money. So thank you for watching. I hope this video helped. Mohammed Zohaib, experience the experience.